Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 future chart. S&P trading at 5,422, quite volatile today, lots of up and down swings. But before we get any further in today's video, just real quickly, anyone who's interested in receiving my trades via my private Telegram group chat, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's YouTube video. But let's have a look at the markets. S&P, as I just mentioned, 5,423. We had a session high today, all the way up around 5,445, with the low all the way down at around 5,402. Lots happened today. We had the PPI inflation report that come out significantly weaker than expected. And then on top of that, we also had the jobless claims that come in also higher than expected at around 242,000, which is the strongest number we've seen in over a year. So there's still some very clear evidence here that we are starting to see the US economy soften. It's not free falling, but it is starting to soften, and that's what makes it very difficult when you hear what the Fed said yesterday, where they've reduced their interest rate cuts from 3 to 1. That's their expectations going forward, of course, which raised many eyebrows in the conference room yesterday, in terms of journalists from several different media outlets, and including myself. Now, obviously, I wasn't in the conference room, but I was very, very confused as to why the Fed has said one cut compared to three. And obviously, today we had some great data that backs up the fact that inflation is, in fact, falling. So this now makes it very tricky for the Fed because they're completely out of line with reality. We had the CPI come in significantly weaker than expected yesterday, the PPI, as I just mentioned. And now we have a Fed that's now out of line with they're out of touch with what's actually happening with regards to inflation. And this now may result in a very quick, impulsive decision in a few months' time when we, potentially see further weakness in inflation. We might get 2 rate cuts from the Fed, which may, throw people off guard. So next week we start to get a lot of Fed talk, and I do expect a lot of the Fed members to retrace their projections that they've updated over the past couple of weeks. What we heard yesterday, of course, and I feel like we are going to hear a lot more dovish talk from Fed members, and that could potentially fuel the stock market to trade a little bit higher here. That being said, I'm not really interested up at 5,420. I would like to see a pullback. Maybe 5,400 is an area where I could start the dollar cost average in. But this 5-wave could potentially be complete. And we might just need to see some consolidation after some very strong moves over the past couple of weeks.